With chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind, a peek at the week and weeks to come, trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, February 23rd, 2024. Some shout outs to Don, Hudson, Tom, all the folks that tune in week in and week out, listen to the show. We greatly appreciate it. It's why we do it. Glad you're getting something out of it. And we're glad you're with us today. So let's go ahead and jump into the numbers. It was pretty much a positive week for the major indices. Dow Jones up 1.3%, S&P up 1.6%, the NASDAQ composite up 1.4%. The Russell small caps struggling a little bit, down 0.8% this week. But overall, a positive week for the markets. The volatility index down 3.4% this week, now back down to, again, a very low level, 13.7. So not a lot of expected volatility in the next 30 to 45 days based off the options market. Looking at long-term bonds based off the TLT, up 1.1% this week. So bonds getting a little bit of a bid there. Rates coming down a little bit this week. Maybe a little bit of fear of some of the economic data that we saw. And then you take a look at all of the sectors and really everything, it was really broad-based this week. Everything was just up a bit. Energy, staples, utilities, healthcare, industrials, tech stocks were up a lot because of the semiconductors, up 3.4%. You can thank NVIDIA for that with a monster quarter. Gold and silver, gold up 1.2, silver down 1.8, both still down a little bit here for the year. So what drove the markets this week? Well, a couple things. There's been economic data and earnings, but really what drove the markets was earnings. And what really drove it was earnings of one company, NVIDIA. That is a chip-making company. They are really eyeball deep with the artificial intelligence chips. And all eyes were on NVIDIA coming into this week. They're one of the larger companies in the world today. And the stock's been a juggernaut here for a couple of years because of this rapid deployment of artificial intelligence and the need for the chips that can process all of that data. Well, anyway, the stock's been running hot. And I think all eyes were on that this week because if they missed a little bit, I think you would have seen not only NVIDIA come down pretty hard, but it probably would have taken down the whole market to some extent, because the whole market is actually a bit elevated right now. Well, that didn't happen. NVIDIA reported a good quarter with a good outlook, and the stock just shot up once again. Now, I wish I could say we own NVIDIA. We don't. Well, we have another company that I think is also absolutely fantastic. That is AMD, major competitor to NVIDIA. And that decision happened a couple years back. It was just a situation where NVIDIA was far more expensive than AMD at the time. And actually, it wasn't even AMD. It was a company called Xilinx because that was even cheaper than both of them. So we bought Xilinx, and then AMD bought Xilinx from us. We doubled our money on that. And now we own AMD at around $67 is what we originally bought it for the model. It's around $176 right now. So I'm not complaining. I think it's doing just fine. But, you know, when you look at NVIDIA, the reason why I haven't jumped on that particular stock is because they've got a huge target on their back. I mean, look, hats off to Jensen Huang. They've paved the way here with their technology. But you hear major companies like Microsoft consistently saying, yeah, we're looking to develop our own chips to get away from NVIDIA. Because, I mean, look, they're charging them an arm and a leg. You've got other competitors like the one that we own, AMD. And Lisa Su, who's a fantastic CEO, also making inroads in developing chips to compete with NVIDIA. So I'd rather own someone that is taking market share versus a company that is at risk of losing some market share. And that's why I don't have NVIDIA in the mix, but we do have exposure to artificial intelligence chips with AMD. And also we have other artificial intelligence plays. Facebook. I mean, goodness, NVIDIA reported and their stock shot up 10%. The same day, Facebook went up another 4 or 5. Why? Because they are using so many of NVIDIA's chips, because Facebook's doing a lot right now with artificial intelligence. We also have Google. We've got plenty of artificial intelligence exposure. So I'm real pleased with what we've got going on there. Other news this week was economic, and interesting what's going on out there. The leading economic indicator index, the LEI, it's something that I follow. Historically, you get 2 or 3 months where the LEI is down. You're about 9 months away from a recession. Well, right now, I think the negativity on the leading economic indicator index, it may be the longest in history at this point in time. It was down yet again. This is something like a year and a half, 16 months in a row, maybe something like that, or 18 months in a row. It's really unbelievable just how terrible it's been. But the economy continues to hang in there. And look, we're even seeing some improvement in other areas, like manufacturing numbers are a little bit better this week, and housing starts a little bit better than expected, and things like that. So the economy continues to hang in there, which is what we expected. We talked about it coming into this year. I didn't anticipate recession. The numbers just aren't bearing that out right now. I think it's probably more likely in 2025 into 2026, but still interesting to see some of the traditional indicators be so wrong for so long. And is that because of all the money we printed? I don't know exactly what the dynamics are that's causing it. A lot of folks don't. I'm just glad that we combine our approach with fundamentals and technicals, because if we just focus on the fundamentals and focus on the economic data, we would have been hunkered down under a rock 2 years ago and would have missed out on these big gains of the market. So that's why we mix the two, fundamentals and technicals, and we continue to do so. The Fed, some of the information coming from the Fed, quantitative tightening, they're talking about maybe easing up on that. In other words, you're going to potentially allow a lot of debt to continue to float around in our system, which allows a lot more money to be there for the taking. So we'll see how all these things pan out. I will say this, the market itself continues to look a little bit tired. We're going to have a pullback at some point. I've been trimming a lot, and I'm going to do some more trimming. I didn't trim this week because NVIDIA's report was so strong that it pushed Facebook up a lot more and things like that. And then we had Rolls-Royce, which reported again this week. That stock was up 10% again this week. I mean, I think we're already up 300% on this stock. It continues to go higher. But I'm looking to trim all of these. Rolls-Royce, Facebook, Eli Lilly, which continues to be on fire. We bought a year ago this month for $330. Is it what, $770 right now? So I do want to trim some more. I've trimmed it from all these already. I want to do it again. Why do you do that, David? Why do you sell the stocks that are doing the best? Well, keep in mind, I don't sell them. Okay, I'm not getting rid of a position. There's an old adage, you let your winners run, right? You cut your losers, let your winners run. I'm not selling them out completely. I'm just trimming them along the way. And why do I do that? Here's an example for you. There's a cybersecurity company that reported this week, Palo Alto Networks. It's just a beast in that industry, one of the top dogs in that space. We don't own Palo Alto. We own another company called Fortinet, for similar reasons why we don't own NVIDIA, right? Fortinet is more profitable and they are less expensive than Palo Alto, even though Palo Alto is a bit of a bigger name as far as recognizability and that sort of thing. Anyway, I'm jumping off track here. The reason why I bring up Palo Alto, great company, stock's been on fire. It's up tremendously, leader in their space. They reported this week and that stock dropped 28% in a day. And we're not talking about some fly-by-night startup, folks. I mean, this is an established leader in their space, leader in their industry type of company, down 28% in a day. And they beat on the top and bottom lines. If I remember correctly, they just didn't have quite the outlook that the market was anticipating. So my point is this. You have to be careful. Let's say you paid $50 for a stock and it goes up 100%, 100% from 50 to $100, okay? And then it goes down 28% in a day from 100, right? Think about that. All the way back down, just like that, in a snap of a finger, back down to $72. Now you're still up on it, right? From 50, but $72 versus 100, that's a big difference. You go up 100, down 28, and you can see what happens. Now you're only up 50% on the stock where you used to be up 100. So the downside can have a really big impact. And I'm going to tell you something, the way the market is these days, when a stock's going down, half the time it's down 20% at the open. There's just no way to get out. it gets hit in after hours by computer trading. And by the time the market's open, it's already down 20%. So that's why I like to trim as it's climbing. I mean, we got stocks like Rolls-Royce, it's up 300+%. Facebook's up over 300%. Eli Lilly's up 150+% in a year, whatever. I like to trim these stocks while they're climbing and keep their positions right-sized, as we call it in this business, meaning we don't want any one stock to start to represent too much of our portfolio, because if they do get hit suddenly for any reason, you just never know what the reason's going to be, we don't want to give up all that gain. But we still hold the positions if we love the company, because we want to let our winners ride. We want to let them ride. We want to continue to climb higher. We just want to trim them as they go. So hopefully it gives you a little bit of insight as to why sometimes you see us trimming the stocks doing so well. We're just being prudent. That's what you do, right? Sell high, buy low. So I'm going to go ahead and wrap up. We do have some cash on hand. Going to do a little bit more trimming next week. I think the market's still looking a little tired. Earnings expectations haven't improved this quarter. They haven't. As a matter of fact, 61% of the companies that have reported so far have had their expectations drop. That's a concern for me. That's concerning because, remember, market cares about earnings and not about yesterday's earnings or last quarter's, but next quarter and the quarter after. So this is a little bit of a concern. I've got my eyes on that, but I like how we're positioned. I mean, if the market wants to give us a little bit of a stumble, I would love to see it. Maybe 5% down so we can just kind of jump on that and do some buying. We're ready for that. And if it doesn't go down, that's okay too. We got plenty of exposure to make money along the way. So between now and next few meetings, you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it's retire a little early, buy that second house or RV or boat, or pick up that electric vehicle. Got a client picking one up next week, so good luck with that. Whatever the case may be, don't just think about it. Think big. Think BIG. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.